you with us today, and thank you for that introduction to get us going this morning. Hello, everyone. Welcome. My name is Brent Barclay. I'll be facilitating our program today. It's been a couple months. If you've been coming to these on a regular basis, I do these most months. But been out doing training and other things, but my colleagues have done a great job. So hopefully it won't be let down. Going to the bottom of the barrel now as I jump in and kind of share a little bit about Boeing as we get going today. As we jump in here, I want to make sure we're comfortable with some of the tools we're going to be using. Boy, 2.5 years with COVID and other things like that. I assume we're all pretty comfortable with these. But let's just make sure that chat box is open. And here's what I want you to do. Just put in there where you're calling in from. Could be a city, could be a state, could be a country. Let's all engage around here. We're calling in just south of Salt Lake City, Utah, where I woke up this morning, a little south of Salt Lake City, and it was 14 degrees this morning. Talk about a cold morning as we get going this morning. But good to have everybody. Oh, got some international welcome individual. Got some people from Canada. My wife is from Calgary, Alberta, so I love Canadians. Grateful to have you on board with us today. A lot from the United States. Let's see, we've got Mexico. Welcome here, international. Any others coming from international? Good to have everybody. And we'll be using this tool throughout today as Bailey described. I'll be watching it. She'll be watching it. Try and help answer questions. At the very end, we'll also stay on and answer any additional questions you might have. As we get going today, another tool we're going to be using is our polling tool. And as you look at our polling tool, that's going to be something we'll use throughout today to help us answer questions. So the first question I have around our polling as I open it up for you, you should see that on your screen. My question is, have you had a chance, is this the first time you've had a chance to participate in one of our webinars? Yes, it's my first time. No, actually I've attended a few. No, I've attended quite a few, etc. as we get going this morning here. Now, don't worry if it's your first one. We're grateful to have you. Welcome. These are a great resource to help you practice learning how to listen to earnings calls, how to be able to assess both the strategic focus of a company as well as their financial performance. We actually have a tool that we'll provide for you at the very end that I'm going to walk you through. And every month we do a different company from a different industry, different organization. Now, many of you have participated in our graduates of our Building Business Acumen programs. This is a great, we invite you to participate to the next 2 or 3 after you've participated in the program, because it's a great way to continue to build your business acumen. If you haven't had a chance to be part of one of our programs, please, at the very end, we'll give you a chance to be aware of what resources and opportunities are available to you. But it's a great way to continue to build your understanding. So as I see that, it looks like we've got our answers here, and as a group, it looks like we've got about, the majority of it, 60% or so, 59% are brand new. So welcome. Good to have you here. Well, for those of you who've been here, that other 41% that have been with us before, you may recall that we actually did Boeing 2 years ago. Now, I don't know if you've been doing this for 2 years, but we actually did look at Boeing a couple of years ago. This is the first time we've come back and actually looked at the same company. Well, here's why. If you look at our experience with Boeing in 2020, so it was kind of fall of 2020, one of our early sessions that we did, boy, they were in trouble. Think about oil, aerospace during the pandemic. People weren't traveling. Demand for products were down. It was hard to access inventory. They just come off of the 737 MAX had those 2 incidents, right? 2 airline incidents that they were restricted. They were grounded. So they had 450 737 MAX ready to go, but they couldn't deliver them till kind of Q4, that last quarter of 2020. We combined that with the pandemic. The thought was, what if we went back and looked at them and said, okay, so where are they at? 2.5 years later, or at least 2 years later, where are they at? What's happened to them? So this is kind of an interesting kind of review as we learn to use the tool by looking at a company we've looked at a couple of years ago. So one of the another poll question I've got as we start, you're coming to an earnings call workshop on how to listen to these earnings calls. My question is, when's the last time you've actually listened to an earnings call? Let me get my poll question up here. Got this new fancy webinar that they're doing here. I don't want that. Let me get this one up here. Only allows me to have one poll question at a time. That's kind of frustrating. So here we go. Here's my question. I open it up right here. When's the last time you listened to an earnings call? Could be your company's earnings call if you're part of a publicly traded company. Could be a customer. Maybe you're selling into a customer who's publicly traded. Could be a company you're just interested in learning more about, maybe from your investment strategy. When's the last time you've actually had a chance to listen to an earnings call? Was it this year, last year? It's been a while, Brent. You know what, never, or you know what, I'd rather go to the dentist than to read or listen to one of these earnings calls. This is a great season right now. Basically, Q3 just ended end of September. So basically about 2 to 3 weeks into October, you start to get these, and we're still having some. They'll go through most of the month of November. You'll get these earnings call experiences. So as you look at this, it looks like many of you have had a chance to listen. That's wonderful. I'm glad that you have done that. And I highly recommend as you come back to next month, if you choose to do that, next month we're going to be looking at Visa, a great way to continue practice using these tools, along with looking at your customers, etc. Well, these earnings calls, for those that haven't, there's a few of us who've never had a chance to listen to these earnings calls. No worries. Let me kind of describe these earnings calls. I call them a hidden gem. If you really want to differentiate yourself within your organization, listening to your company's earnings call, if you're publicly traded, if you're working with a customer, and they're publicly traded, listening to their call. If you look at it from kind of an investment perspective, being able to listen to these companies' calls, it's a great way to assess what's the financial performance of the company, what's the strategies, and how well are they doing towards those strategies. They're a great resource. And even with these resources that happen on a regular basis, there's some interesting stats around employees understand their company's strategy as well as their financial metrics. You'll see this stat here on our page here today. 95% of employees don't understand their company's strategy. Now you may say, wait a second, Brent, here at our company, a lot more of us are very familiar with those strategy. We have a chance to work with many great companies. 33 of the Fortune 50 we've had the great honor of working with, many of the Fortune 500. And what we tend to find is senior executives are doing everything they can to squeeze a dollar of the financial statements, create greater profitability, greater cash flow, drive towards those goals and outcomes. When you think about it, these companies, a company like Boeing, we're talking over 100,000 employees or so, a large number of employees. How do I get those employees to truly understand their business? What we find is our employees are functionally brilliant. They're very good at what you do. You know your role, your responsibility better than I would ever be able to articulate your role. That being said, we tend to kind of go through our careers with our blinders on, very focused on my functional role. What these earnings calls allow you to do is step back for a moment. Let's get the big picture perspective. If it's my company, truly understand what the strategies are, what are the key metrics, and most importantly, what can I do to drive towards those key metrics and measures? Now, if it's a company I'm selling into, I really want to know what they're driving towards. If you really want to differentiate yourself as a sales individual, in fact, we have a whole course on this, Building Business Acumen for Sales Professionals. One of the biggest differentiators, if you know their business and what they're driving towards, and then you can help them make that internal business case as to why a partnership with your company will drive towards their key metrics and measures, their key strategies. No longer are you a sales individual, you're a trusted partner. You're part of the team helping them make the decisions. So that 95%, even though these are all available, that's why I call them a hidden gem. Even with these, 95% of employees don't understand their company's strategy. Here's an interesting stat. About 90% don't understand their company's important business metrics. These come from some research done by Harvard Business Review and some internal research that we've done. Well, so now imagine that. If these stats are true, even if they're not quite, but a significant amount of your employees don't understand your key strategy, key metrics, and now you're the CEO of a large multi-billion-dollar company, for example, Boeing. Here we have Dave Calhoun, who's their CEO, has gone through this whole kind of pandemic, trying to kind of resurrect, get the company on the other side of some of the challenges they've dealt with. You got one of the largest aerospace companies in the world, America's biggest manufacturing exporter. More than 153,000 employees located in over 65 countries. Man, if you don't feel overwhelmed, I would absolutely feel overwhelmed. You think about if we're a small organization, 60 of us, we could meet fairly regularly. We can interact and communicate a lot more maybe. Versus 153,000 people. How do I get them all on the same page? So the real question around these earnings calls and how to use them, how to think about it, think of this from the perspective of the CEO. What is it that he wants, what does the CEO really need his employees to understand about their business, their key strategies and the metrics they can drive toward? What is it they want their customers to know? What is it they want their shareholders to know? And most importantly, also, how can they get their partners, all of these groups coming together and executing around a strategy? Well, that's what these earnings calls are all about. It's a resource to be able to communicate kind of where they're currently at, where they want to go, and how they're going to get there. Now, these calls are not required. They are required as a publicly traded company to submit financial information to the Security and Exchange Commission, often referred to as the SEC. But we're not required to do these earnings calls. That being said, majority of companies will take this time. They don't want to just send their information. They want to be able to articulate to the market, to their investors, to their partners, to their employees, what is it we're trying to do, and how will you help us to kind of get there? Well, here's my guarantee. As you think about what's the value of listening to these calls and what's the value for me, my guarantee to you is this. If you really want to differentiate yourself, I would highly recommend that if you were public, if your company's public, that every quarter you review your call using the tool that I'm going to walk you through. If you're not publicly traded, but maybe you're looking at investment strategies, or maybe you're in a sales world, maybe some of your customers are, whatever the reason is or interest you have around looking at a company, my guarantee is this. We've been doing this for 20 years, do over 1,200 sessions, multiple company, multiple industries. Those employees who take this tool and use it on a consistent basis, my guarantee is 2 to 3 quarters. If you do 2 to 3 quarters consecutively, you will build your credibility within your organization. People will start to notice, hey, you seem to have more knowledge about what's going on in this business than most of us. You'll build your career and you will build your company. You will absolutely differentiate yourself. So that's the reason I would highly recommend taking the tool that I'll give you at the end of this course. And if you haven't listened to your company, your customer, or whatever company you're interested in, absolutely do that. So with that brief introduction, I want to give you a simple framework, a process, a simple framework, and a tool that will help you kind of go through these and make sense of them. The process is very simple. As you think about these earnings calls, there's 3 steps. You want to prepare for these, you want to analyze these, and then finally, you got to take that information and do something with it. That's how you differentiate yourself, as you take the information and say, okay, based upon what I've heard, what am I going to do about it? So with that approach in mind, what I want to do is kind of walk you through those steps. So in the tool that you got access at the end of our program today, as we talk about the preparation phase, let me just kind of highlight that. First of all, as you think about what these calls are in the document, it's a little summary of what they are. There's basically 2 parts. For those that 17% have never had a chance to listen to one of these, the first part is typically your senior executives are taking the time to do what we call prepared remarks. This is their preparation, the communication that they want to give to the market. Again, they kind of describe where we've been, where we're currently at, and where do we want to go. And most importantly, what do we think we're going to do to get there? How are we going to do that? Once they've done their prepared remarks, it then shifts and the analysts get a chance to ask questions. Now, these analysts are part of these major investment organizations. Companies like Wells Fargo, these large investment, Barclays, after me, not really my company, just kidding. Citi, all these different investment groups trying to get information so they can make recommendations to their investors. So they're typically somewhere about 45 minutes, upwards of about an hour time frame. That being said, some can be even longer than that. As you look at these calls, you can kind of break them down in those 2 sections. So in the prepare phase, what are the 3 things we suggest you do before the call? Number 1, you got to locate the call and the transcript. So let me kind of describe that process. And what I'm going to do is I'm going to jump over to our website here, go to Google here, and all you're going to do is type in the company you're looking at. So I type in Boeing, the quarter I want, which is Q3, the year I want, 22. I can stop there. I'm going to just put earnings at the end. And you notice it starts to give you, tries to complete. If you want to get the transcript, so you can go there. But I go ahead and just click on that. And what they're doing here, and this is, by the way, recent. They've got a bunch of extra stuff they're trying to show at the very beginning. But you're going to start looking. There's a lot of information here. The first one, you're going to have news that comes up. You're going to have different third-party organizations trying to kind of share their information. They'll capture whatever's communicated and make that available to those that subscribe to Motley Fool, Seeking Alpha, etc. Now, I typically want to go to the company itself, particularly if the call hasn't happened, because what I'm trying to do is I want to sign up for the call. I want to make sure I get registered to have access to that. So I jump into Boeing's here, and if it was prior to Q3, there would be a place that would have the earnings call, and all you do is click on it, and it opens up and you just register for it. Now, don't worry, they record all these. In fact, you can these recordings are available, and you see it right here. If I click right here, that webcast, I go in, I register, and I can access that. So if it's prior to the call, you want to register for the call. That's what you're doing there. Once the calls happen, though, a lot of information is available, and that's what you see on here. This is the regulated requirement. They're expected to submit to the Security Exchange Commission that what's called a 10Q. That's the quarterly report they submit to this SEC. That's available. So I jump in there. They give me access. This is their financial data. I got a little bit of review of kind of what's happened in the business. For those of you taking our class, you're familiar with management discussion and analysis. They have a whole section where they'll walk you through what happened on each of their key metrics and measures, etc. The earnings release is available. This is a great document to have. It's a nice summary of the data in about 13 pages you'll see here. In addition to that, the transcript, where they actually transcribe every word that is stated. Who spoke? Here's their president. Here's what he said. Everything he communicated. He has what their CFO communicated, as well as all the questions that the analyst asked. Here's the Q&A. So you get all that information. So you don't have to necessarily listen to it. You can read it, but all that information is available after the course. Now, one of the things I love is those companies that do a presentation, because in the slide itself, you can get a lot of data and a nice summary of what's going on in the business. So the first thing you want to do is you go to listen to these calls. You got to locate it. It's just a quick Google search. Put in the company, the year, the quarter you're interested in, and it'll provide that information. By the way, it also will keep historical data. I can actually go back to that website and I can look at different quarters. I can do searches to access different quarters of information by going to their events section, and I can access various quarters of information, do searches to access Q2, Q1, annual, etc. is all available in their on their website. So once you've either registered for the call in preparation for it, or the calls happen and you're accessing the information, the next thing you want to do in preparation for these is to kind of review your past notes. You might say, well, Brent, what do you mean past notes? Well, if you do this 2 to 3 quarters, it's going to be this document. You've put it together, do a quick review. What were their key messages? What were they driving towards? Now, as I listen to Q4, what do I see going on? How much of that was actually implemented, etc.? So you review your notes. Now, if you don't have notes, no worries. You can go back and go to the website and download prior quarters and kind of see what's going on. The last thing I highly recommend is to do this with a group. My recommendation is to get with a colleague, a peer, a direct report. If you're a manager, bring your team together. It's a great way to kind of learn together about what's going on in your business, your customers, or the companies that you're looking at. So that's the prepare phase. Now, the meat of the document, the meat of the tool that I'm going to provide to you is the analyze phase. How do I take all this information that gets communicated, as well as their financial statement, metrics, and measures, and how do I make sense of it in a way that I can then apply it? This last section, what we want to talk about. So as you talk about analyzing, the first thing I want to do is introduce you to a quick 5-driver model. Now, for those who have been in our courses, you're very familiar with these 5 fundamental drivers every company focuses on: cash, profit, assets, growth, and people. These are fundamental drivers, whether you're a multi-billion-dollar Boeing or you're a small mom-and-pop shop. They're fundamental as you think of the focus of a business. So as a quick review, as we talk about cash in business, everybody open your chat box. We'll do a quick review of this, so we'll use that throughout as we look at Boeing's quarterly call. So we talk about cash. Cash is vitally important in companies. Cash is blank. Fill in the blank for me, if you would. When we talk about the importance of cash, cash is blank. Well, how would you fill that blank in? Cash is king, absolutely. Cash is king. It's the oxygen supply of a company. And Boeing is a great example of this. If you had a chance to read their call, majority of their call is about cash. If you run out of cash in business, you die. So cash is vitally important. If I want to know what's happening on cash from a business perspective, it is their cash flow. Yes, Kevin, absolutely. Yes, Ilana, absolutely. A queen, king, any royalty we want to look at. Fuel, oxygen, however you want to describe it, vitally important. What you find is you listen to these calls, companies don't spend a lot of time talking about cash unless they're having challenges around cash. And that's definitely what you heard on Boeing's call. The next driver we talk about is that of profitability. There's 2 levers that you can do to impact profitability. You got to increase one item or decrease an item. Anybody happen to remember what those 2 levers are? How do I grow profitability in a business? I want to increase one thing. Yeah, increase price and or volume, Meg, absolutely. Or what we just say, increase our revenue or sales, which Meg's right. You can increase it through pricing. You can also increase it by selling more. The next lever is to reduce our cost. By the way, these two levers, what I call business 101. If you want to jot that down in your notes, this is the fundamentals of business 101. Why? Because these two levers impact cash. They also impact profitability. They impact your asset utilization. Your growth is driven by this business 101 drivers, etc. So absolutely vitally important. If you want to see what's going on in a company's profitability, you're going to look at that income statement. And if you look at their profitability at Boeing, you're going to quickly notice that they're struggling from a profitability. They're still working their way out of the challenges of the global pandemic. Of course, assets are anything you own or control which has values. You think about Boeing, what would you guess are their assets? If you were to look at their balance sheet, what would be the key assets you would probably see on Boeing's balance sheet? If you talk about assets, of course, the balance sheet is where you're going to look. You'll remember balance sheet includes your assets, the liabilities against those assets, as well as the equity or ownership in those assets. Yes, Adam, a number of you, Karen, etc. Equipment. They've got planes, of course. Yes, 278 737s in their inventory, just 737s alone. That doesn't consider the 777s or the 787s, but they're trying to get those delivered. In fact, one of the interesting things is in China, they produced 138 planes for China, and China is not accepting them. So that's a big issue. If I got a lot of inventory, what does that do to my cash? We'll actually see a reduction of cash. So really trying to play through and get through that inventory. But absolutely, planes, facilities, warehouses, etc. They actually have cash themselves as well. Of course, growth is what investors expect. And people, the core of any business is people. Now, when we talk there, we're talking both that external customer, those that buy or use Boeing's products or services, but also internal customers, their employees, their colleagues, their peers. How do we work together to get greater execution is what we're driving towards. So this simple framework is a way that you can capture what is it the executive team is talking about. You can kind of use the 5 driver models as a simple way to hang the key metrics or measures. What are the key metrics they talk about around cash, profit, assets, growth, and people, etc. So with that framework in mind, the tool is really built around this. The first tool that we give you is called the Executive Alignment Activity or Tool. And what it is you're going to use the 5 drivers to assess the strategic focus of the company. Here's how it works. As you listen to a call or as you're reading the transcript, however you want to do it, what you're going to do is every time they say something about cash, you're going to put a little slash mark. Every time they say something about profitability, you're going to put a little slash mark. Assets, growth, and people. For those who have been on this call before, you're very familiar with it. It's just a simple way of trying to capture what are they focused on. Now, eventually, you're going to get through that call, and you're going to summarize all those numbers. So you're going to have a bunch of cash, bunch of profitability, etc. Now, don't worry if you're saying to me, Brent, you know what? I've never been through your class. I'm not sure exactly unless they talk about cash, I don't know exactly how to think about cash in business. Well, don't worry. I give you a definition in the tool. There's a brief definition of what we mean and kind of the key metrics around it. Not only that, I give you what I call trigger words. These examples are words if you hear anything about dividends or distributions, that's cash. They're taking cash and getting it back to their investors or shareholders. Stock buybacks. Well, that's a use of cash. I'm buying back stock. I'm issuing stock. That's a source of cash. So we give you the little trigger terms to be kind of looking at. And again, over time, as you do these 2 to 3 consecutive, you'll know exactly what your companies are focused on. Well, once you're done with that, you then answer 4 simple questions. Which business driver seem to get the most attention? I love the second part of it. And why? What's going on in the industry? What's going on in the market? Why should we be thinking about this, etc. is kind of how you think about that one. What are the 2 or 3 key messages the executives or main points the executive was trying to make? What are the goals and trends and objectives going forward? And then now the last one I love is what are the questions or concerns raised by the analyst? Now, the reason I like that question is I can kind of tell if the executive team communicate their prepared remarks. And then as analysts start to ask, you can kind of tell whether they're buying what the executive team is saying or whether they're kind of critiquing it a little bit. And actually, this call was one of those calls where you had more critiquing than you typically hear. a lot of questions that were a bit challenging, where the executive team were having to step back and say, look, we're not going to talk about the past, or we're not going to, here's what we're doing for the future, as they really try and get clear on what's really going on in the business so that they can make good recommendations to their investors. So that's the executive alignment tool. Pretty straightforward. Use the 5 drivers, capture what they're talking about, then answer 4 simple questions. Once you're done with that call as well, the last part of it is kind of look at their stock price. What happened? Is it going up? Is it going down? How's the market kind of viewing what they communicate? Is another thing to do as you think about the strategy of their business. Well, folks, we don't have time to go through the whole thing, but what I want to do is I want to practice using this, and then I'll show you what I found in the call itself. So here we go. What I've got is I've got some quotes here. I've got 3 quotes. And what I want you to do is have your chat box open. Let's practice doing this. You have on your screen, you got the quote, and on the right-hand side, you have the 5 drivers. And what I want you to do is I'm going to read this first one, and as you see words or trigger words for you, I want you to put in the chat box, which of the 5 driver are they focusing on? So here we go. Here's Mr. Calhoun, their CEO. He says, this quarter was a big one for us. We hit our marker, a marker we set since the beginning of our turnaround effort and at the beginning of 2020. And that was to generate positive free cash flow. Yeah, I can see everybody. Cash, cash, cash. Yes, when it actually says a term or a metric, that's pretty self-explanatory. Now, of course, why? Why are they talking about this? If you had a chance to listen to our call in 2020, you'll remember they borrowed $42 billion to help fund or to keep them in play to fulfill the contracts they had, both governmental contracts as well as commercial contracts, to deal with the fact that they had significant cash outlaid in airplanes that they couldn't deliver quite yet. There's a big, and then of course the pandemic hits. So cash is a big deal for them. He then says, we generate $2.9 billion in the quarter. This is cash flow, by the way. That puts us on the path that we projected for 2022, which was positive. They're trying to get back to positive free cash flow. Very important accomplishment for us, and I think begins the real turning point for the company. Just to give you an example, if you had a chance to actually look at their financials, as of the first 9 months of 2020, they had a negative cash flow, $4.132 billion. What does that mean? The difference between the cash that came into their business in the first 9 months of 2021 versus the cash that went out to fund their business, their labor costs, their utility, all their period costs, was a negative $4.1 billion. They weren't generating positive, just even cash flow, let alone free cash flow. So they're trying to get out of this, and it's the first quarter that they've done that. $2.9 billion of cash, and yes, Karen and Alpesh, this idea of growth as well, looking at growth. At the same time, we took a charge on our fixed price development contract. Now, what is that? Well, basically, in their governmental contracts, they signed a commitment, but this is what they'll charge, independent of what happens on costs. Well, of course, what do you think is happening to that today? As inflation is skyrocketing, we're 9-10%. What's happening to their costs? Their costs are skyrocketing, but they can't change what they can sell it for. So in the end, they end up taking hits on they're doing charges against those. As costs go up, they're charging against the fixed contracts that they have in place. Karen asked, do government agencies hold earnings calls or something equivalent? Great question, Karen. Sometimes you'll hear governments do an annual report, an annual investment. If they have certain debt obligations, they'll often put material out to their communities or organization, what's going on. But as far as an earnings call, I'm unaware of specific times. You know, you'll hear like a State of the Union type address in the U.S. government, or sometime your local governments will do something like that. A lot of their information for state and local governments here in the United States is available, budgets, etc., if you go to their website. But as far as kind of a quarterly communication, I'm unaware of that. If anybody else is aware of something like that, put it in the chat box. Great question, Karen. So, which of the 5 drivers here? At the same time, we took a charge on our fixed price development contracts. We believe that the charge, by the way, that was a $2.8 billion charge. So basically, they're reducing their profitability by $2.8 billion because of inflation, and they can't increase what they charge for it. That charge that we took is meant to complete these contracts, ultimately to deliver them to satisfy customers in the Air Force and Armed Forces. In fact, one of the biggest ones they talked about is the Air Force One. And it's kind of unique. If you happen to listen to the news last night, somebody, you may have heard of him, was an ex-president, announced that he was going to run again, I believe, last night. But he had negotiated a contract with Boeing on the next version of the Air Force One at a fixed rate, and their costs are skyrocketing, and they can't increase the price. Kind of interesting to see how that's playing out for them. Well, that's how it works. Now, as you go through these, it's not going to be an exact science. Meaning, as we go through, if you were to read the whole call, and I was to read the whole call, we're not going to get the exact same number of times we say cash, or the exact same number around growth or profitability, etc. That being said, we do, like I said, about 1,000 of these sessions every single year. And as we do those, invariably, the top 2 or drivers will come up for everyone in the group. You may not be in the exact same order, but you'll definitely be at the top there for sure. As you look at this document, a lot of times what I do is rather than go through and just take a paper, put a bunch of slash marks, you may be able to see on here, I actually just mark up the transcript. I just write right next to it, oh, hey, they said something about cash, and mark it up that way. It's a great way to do that. There you go. 3.9 billion for the Air Force One. Excellent, good information there, and and their costs are pretty high as well. Well, let's jump back here. So now I've got another one here. What I've got here is Brian West, their CFO. I'm not going to read it. You just kind of review it, and in the chat box, put which of the drivers are they talking about based upon what you read. This would be the participation part of our program. So jump in and mark that up. As you look at the screen, which of the 5 drivers seem to stand out as you read through that? Yeah, we're seeing a lot of cash, right? At the very beginning, cash flow, as David mentioned, is our primary financial. So that one, more cash right here, generated 3.2 billion of positive operating cash flow. Then you take out their capital expenditures, about 2.9. So a lot in cash in that first one. Yes, we're starting to see a little profitability as you work your way down. Revenue, earnings, both impacted by charges on our defense business. 2.8 billion hit across 5 fixed price development programs. There's a tanker, I think it was about 1.2 billion of that. And then another, I can't remember, I'll have to look at my notes there. But significant impact. So profitability, absolutely, which both of these potentially, you could even insinuate this impacts their growth, right? If I'm nice, generating more cash, that gives me more cash to fund growth. But if I'm anticipating my costs are going to go up, am I going to generate the profitability I'm looking at? So a bit of interesting there. Well, here, not only do you get the prepared remarks question, focus around each of these 5 drivers, but you also see it with the analysts themselves. So this comes from Bank of America Securities, Ronald S. Epstein, senior analyst, and here's kind of his question. What do you see in his question? Which of the 5 drivers is he focused on as we wrap up this exercise here? Yeah, again. Now, if you were to listen to other companies, suspicion on how John Hurley's kind of suspicion on the focus on cash flow. Why such a focus? I don't know if that's the question, John, but absolutely think about it this way. You're running an organization, your costs are skyrocketing. You got fixed costs on some of your contracts. That means I can't increase my price. Even though my costs are going up, I can't increase my cost against that project. So I'm not going to get as much profitability. I may even do like a break even. You could even potentially do it as an end cost. In the end, the big issue for investors right now is you've borrowed their total net cash or total net debt is about $61 billion of debt. That's significant, right? And so the only way they can get out from under that weight of that debt is to begin paying it off. Well, the only way I can pay that off is to have cash to fund that payoff. So a lot of emphasis around that. Yeah, Fernando is asking this, are you repeating your mistakes? Hopefully I don't have a mistake, but the company, that was one of the questions the analysts asked. Are they repeating their mistakes? They had a big focus on cash flow before, free cash flow, and then they dropped, the market dropped, and all of a sudden they're borrowing again, and again they're back to this free cash flow. So the real question, one of the analysts asked, so hey, you focused on it before, have you learned from your mistakes, and now you're doing it again? Well, basically the CEO said, look, I'm not going to talk about the past, but why are we in the situation we are today? It has to deal with the fact that we went through a downturn and we borrowed significant debt to help us to kind of meet the expectations of our customers, and we're still trying to come out. Now you combine that with issues in China getting up and running quickly. 138, just imagine 138 737 Max is sitting. I can't sell those, and that's a bunch of cash just sitting there. In fact, they're talking about trying to de-risk that inventory by selling those planes to other organizations, trying to retrofit them so they can do that. So yeah, big question for them was, are you repeating your mistakes you made before? Well, folks, we don't have enough time to go through every single quote there, but here's kind of my breakdown as I went through and kind of marked that up. If you happen to look at it, I don't know if you saw this as well, but definitely cash. A lot on cash, a lot on assets. And assets, I'm doing all the planes and where they're getting deployed, inventory, all that type of question. But there's a lot on all of them, to be quite honest, as you look at it. So the next step is to then answer those questions. Which business drivers seem to get the most attention and why? What were the 2 or 3 key messages the executive was trying to make? Goals and objectives, trends moving forward. And what key questions or concerns were raised by the analyst community? So let me just kind of share what I found. As I went through this, under cash, and we kind of hit a lot of it already. Significant cash and cash flow challenges. They borrowed $42 billion in 2020, about $61 billion total debt that they're dealing with today. 200 during 2020, current total debt of 57. So they've been able to pay that down to the tune of about $4 billion in the first part of 2022. Finally, they have positive free cash flow. What that means is, when you look at free cash flow, you've taken out the investment you've done to kind of maintain your assets and continue to build out your equipment, etc. So this becomes, free cash flow becomes the driver of being able to strengthen their balance sheet, be able to pay down debt, etc. So cash is a big deal for them. And not only that, you can see it in their presentation. You look at cash operating flow, about 3.2 billion is a great number for them as they look at kind of 2022 finally getting to positive cash flow generation. Well, the second thing they spent a lot of time on was looking at the debt against that cash. And so you look here. So right here, they're not including their current debt. They're just doing their long-term debt, about 55 billion. Got another about 3.5 billion in what they call short-term debt that will come due in a year period. That puts them at about that 57 billion number that I was talking about earlier. So really trying to figure out, what does that look like? They got $14 billion cash on hand. One of the questions they asked, they have about $5.4 billion of their debt coming due in the next 12 months. And so one of the questions, are you in a strong position to be able to cover that? And they said, yes, we absolutely are. I got 14.3 billion, plus we should have positive cash flow in Q4 this year. So cash is absolutely important, as they're heavily leveraged, got a lot of cash against their assets, and trying to get that positive cash flow to be able to pay it down. Then on the assets, what are their challenges? Well, the defense, that fixed cost contracts that they're dealing with, that extra cost, 2.8 billion, they just have to kind of eat it, and that's what you see happening. Supply chain constraints. One of the big ones for them is getting access to engines. We're seeing this, by the way, if you're not a Boeing fan, or you're not working or interested in Boeing, but you're here today, any manufacturing organization today is dealing with these supply chain constraints. In the automotive industries, it's getting access to, what are they? Chips, right? My mind just went blank. Somebody in the chat box, what chips am I talking about? Computer chips, what do we call them? Intel, processors, I don't, whatever, but thank you. Microchips. Thank you. Semiconductors. Yes, getting access. So any company that's manufacturing vehicles, technology that needs these chips are struggling to access them. In fact, for some time during the pandemic, companies were manufacturing vehicles and then waiting for the chips to then put them in to be able to run these vehicles. So it's not just airline, and obviously that's a big group that's getting impacted, aerospace, but any manufacturing organization, you restart the economy, getting access to the supplies you need to build your products or services is quite challenging today. A couple other things they talked about from an asset. Other deliveries, their 737 is a big deal for them. 270 airplanes in the inventory. I said 275. I was lying to you. It's actually 270. One of the challenges, 138 of them are for customers in China, and they're not accepting them. Concerns about deliveries to China, looking to remarket and de-risk those airplanes. So you build a bunch of planes for a customer, and all of a sudden, because their demand isn't there yet, because they're still dealing with pandemic, global macroeconomic factors impacting it. They're worried about, I built all these and they're not going to take them, so I've got to get out from under those and sell those to other organizations. So big factor around cash is their ability to deliver their inventory and get the new cash coming in. So it's all about their asset deployment and delivery of those. Well, so that's what I saw. There's more I could have highlighted here. Here's commercial planes, 787 deliveries are happening. That's a positive for them. Stabilizing supply chain and production is huge. Not, by the way, on the supply chain and production, it's not just getting access to supply chain, but employees. They're having a real challenge in hiring. They hired 10,000 employees just this year alone. Well, now I got to get them trained, got to get them up to speed to be able to work on these large 737, 777, 787, et cetera, airplanes. Record net orders of about 227 million. They got 4,300 airplane backlog. Those are requests that they have to fulfill. 4,300, that's a $307 billion backlog that they're working through. Delivered about 112 airplanes, including 88 737s. Their goal is to be doing about 31 per month, but they want to ramp that up in the new year to 40 plus per month delivered. And so looking at that and what's going to happen there. So what were the 2 or 3 main points that the executive were trying to make? I've hit some of these already. We continue to experience near-term production disruptions and inefficiencies due to lingering impacts of COVID, supplier disruptions, labor shortages, and factory performance. Big challenges. They come out, they're not up and running quite yet, and getting access to engines, getting the right people in place to be able to build these intricate airplanes. You know, it's a challenge for them. That being said, their message is, look, but demand is still strong. We're still getting a lot of interest in new airplanes. It's strong across the portfolio of products, and it's strong across the world with all of our customers, with the exception of China. Bookings pretty much in every geography are strong except for China. And then kind of his wrap-up statement. The truth is, it will still take some time to normalize. And our objective in the investor conference that they had coming up a couple weeks later that lies ahead is to give you the projections on how and when we think that's likely to happen. When are things going to normalize? You go through they go through the challenge with the 737 getting grounded. Then you get the pandemic comes in. Everything gets shut down. Now they're starting to see more demand. They're starting to deliver a little bit. And all of a sudden you're dealing with issues around supply chain, labor, geopolitical issues, all hitting them at the same time. That's what he's talking about. Still needs to be normalized. So what are kind of the trends and goals moving forward? What do we see happening there? This slide right here kind of talks a little bit about their view of the environment. Continue to expect passenger traffic to return 2019 levels in 2023. So they still see growth happening. Commercial airplane demand remains strong. Supply chain constraints continue to challenge in the industry. Stable global demand for our defense and space products as well. So they're saying in the future, we still see opportunity. It's just getting through some of these challenges or hurdles that we're facing with supply chain, employees, et cetera. So what are their goals and trends? Continue to focus around that free cash flow emphasis and strengthen their balance sheet. Increase their deliveries. Go from on the 737 from a 30-ish number to a 40-plus number is what they're looking at. De-risking the inventory, and that really deals with those 737s, 138 of them. Let's see if we can sell them somewhere else, remarket them to other organizations. Let's get out of that 137 just sitting there. And then, of course, what can they do to build supply chain? Now, just to be clear, they're not just sitting back saying, okay, one of the engines is going to come. They're meeting with their key suppliers on a regular basis saying, okay, what's going on? How quickly can we get this? Doing everything they can to partner with their supplier and getting those supplies in quicker. So what were the key questions raised by analyst community? Cash generation deployment. That was by far the most common. There was, I think, about 8 different analysts that asked questions, and almost every single one of them had some form of a question on cash flow generation and deployment. They start the question, are you losing market share? Boeing's one of the largest manufacturer airlines globally, along with Airbus, their biggest competitor. China just agreed on a contract with Airbus, and it's a fairly sizable a number of those. So the question was, so are you losing market share? As you're not able to kind of pull out of some of your financial challenges, are you losing market share with some of your biggest customers? So that was a big question that was coming out. And then China, the impacts of China and what's going on there and how that impacts the business was kind of a big focus for them. 138 planes just sitting there. Well, folks, so that's the first tool, executive alignment. What do I know now? Well, I understand that cash is king for Boeing right now. Why? They did a significant borrowing to kind of withstand the downturn, but then you deal with supply chain issues, you deal with global economic challenges that are out there. Talented workforce, trying to hire, get people in place to be able, which many companies are dealing with. All those things, it's almost a perfect storm for them as they try and now work through that. Now, the fact they're positive cash flow in Q3 is a big positive for them. They were not positive for all of 2021. So the fact that they actually have positive cash flow and actually starting to generate positive free cash flow is a huge positive as they then start to be able to use that cash to pay down their debt and strengthen their financial position. So where do we go from here? Well, the next tool that I had introduced you to is called the Navigating the Financial tool. With this tool and any financial information, you can quickly assess a publicly traded company's financial performance. So let me walk you through how this works. For those who have been on the call, the nice thing about it is the 5-driver model in our courses that we talk so much about is right there. You don't have to memorize key metrics. I give you them. Now, these right here are the key metrics most companies focus on. Now, your company may have different ones, but these are the most common metrics every company focuses on. So it's a nice kind of starting point as you look at those calculations. The genius of this tool is, in my opinion, is the fact that you never have to memorize either the line items, what the titles are, or where to go to find them. Right here will tell you. If you want to access cash and cash equivalent, you're going to go on the balance sheet. Now, if there's some sort of calculation, there's a place where it gives you a place to do the calculation. So again, you don't have to memorize this. Now, if you say to me, Brent, I've never been through an accounting or a finance or business acumen course, boy, how would I understand what these are? Well, don't worry. Remember that great website I shared earlier? It was called Google. A great place. Type in Google. And jump in and just type in net income. Type in net income, and it's going to give you a myriad of definitions, how to think about it, etc. Even some videos that are nice resources. At the end of this course, at the end of our program today, I'll also give you access, if you're interested in, a nice little online program that we have that can walk you through all these metrics and give you that education you're looking for. But you don't have to. You can just search it and find that. Yeah, one of the questions are, we got a couple comments here I missed. Executives always try to put the best foot forward on an earnings call, Karen, saying, Karen, are you suggesting that it's not straightforward, exact information? No, there absolutely. There's a bit of a marketing pitch in every single one of these. So how do you gauge authenticity, Karen? It's looking at these metrics and measures. What do I see in your numbers? Am I seeing them really? Are you really generating positive cash flow? Are you really then able to deploy that within your organization? For example, you look at just a quarterly cash flow number, you're going to see a great number, that 3.2 billion. But if you look at for the whole year, the net amount, it's actually only a very small amount of cash. I'll show you those numbers in a moment. So that's one way, Karen. And then Rod, but economy is headed towards a downturn. How do they hedge against the risk? Are they ignoring this? Rod, I don't think anybody's ignoring the downturn. Everybody's recognized that. And there were some comments around that downturn. One of the things is for the airline industry, barring some real global pandemic or travel just comes to a halt, there's still those demands. And you're making these investments today, and you may not get that airplane for 3 or 5 years from now. And so there's a bit of this future that they're looking at that protects them a little bit. But yes, absolutely, they're looking at that. That's why they're trying to get through their inventory and strengthen their balance sheet so they're able to withstand any sort of downturn. So great question. Well, so let's walk through just quickly how to use this, and then we'll go into the last part, applying this. So here's how it works. Let's go through this together. Now, you don't have the financials in front of you, so what I'm going to do is I'm going to just read through them, and I'm going to have you help me fill them out. I'll show you the numbers here. So the first one we want to do is we want to go that cash and cash equivalent. This is recognized as just the cash on hand of a company, cash and checking their savings accounts, etc. Now, what statement do I want to go to? In the chat box, using the tools you see on the screen, what statement do we go to if we want to find cash and cash equivalent for Boeing? Just make sure we're comfortable, though. Yep, everybody see that? Right there. We go to the balance sheet. So you don't have it in front of you. I've got it right here. Those of you who have been in my class, you'll remember they're listed by most liquid down to least liquid. So how much cash does Boeing have on hand based upon this? You're looking for cash and cash equivalent. So most liquid is going to be at the very top. Down to lease liquid. How much cash were they carrying? Cash and cash equivalent as of September 30th, 2022. There you go, right here. We got the 13,494,000,000. Now, for those of you that are familiar, they will often combine these two. So these short-term investments are greater than 90 days, but less than a year period of time. So when you listen to their executive team, they're going to include both those numbers. But for purposes of our training, we're just going to do the cash and cash equivalent, 13,494,000,000. Well, let's now look at the cash flow number. What statement do I have to go to? There's an income statement, a balance sheet, or a cash flow statement. Any guesses to which one you're going to look at? Where would we go to find that cash flow? Thank you, Sandra. Absolutely. We go to that cash flow statement. You don't have it, but I do. So here you go. Here's that number. Cash flow and the line item. Oops, let me go back. The line item we want is cash from operations. Right down here, net cash provided by operating activities or operations. Now notice, remember, they said they generate $3.2 billion of cash flow. Why is this number only $55 million? Well, this is for they generate $3.2 billion positive cash flow just in that quarter. So if you pull in their other document, kind of their edit document, you'll see this. So this is how much they generated for the quarter, but they had negative cash flow in the first half of the year. So that net amount only created a $55 million positive cash flow for the year. So I'm doing the quarterly number, so I'm going to use this for now. So I plugged that in. I got $3,190,000,000. Now you kind of see how this tool works. We now come down and we say, okay, I got to get my total revenue. I'm going to go to my income statement. So I go to my income statement. It's right here, and we're doing the quarterly numbers. You'll notice they're broken up in quarterly and annual numbers together. No. The question on non-GAAP, and it may have been on one of the statements, this little added thing that I put in, it's non-GAAP calculations. So they'll adjust those numbers to some extent, but Boeing is using GAAP, generally accepted accounting principles, Joshua, on your question there. So I come in here, I want to look at the 3 months numbers, and I'm going to see that it's actually a loss, $3.2 billion loss, or $3.3 billion. So I plugged that in. I got we're doing revenue. So the revenue was $15.9 billion. I plug that in. I then go do my net income, also on the income statement. That was this one right here. I pull that in, and now it's our first calculation. I'm going to take that negative $3.2 billion divided by my $15.9 billion. What's that going to do to me? That's going to tell me for every $100 I brought in revenue, how much net income did I generate? I do that calculation. It's a negative 20.5%. That says for every $100 Boeing brought in Q3 in revenue, they generate $20.50 of a loss. Now, why is that? Remember, they took a $2.8 billion hit to their expenses. And so that's a huge hit, and what's caused the majority of their loss that they're calculating there. Well, folks, that's how you do it. We don't have time to go through and calculate every single one. So what I did is I completed it for you. Feel free, if you want to take a screenshot, you can get the numbers and see how it looks for you. Not only did I do it for just Q3 of this year, but I look at that compared to last year. So here's their cash position year over year. Cash generation, huge swing there. Revenue's relatively flat, not a big swing that way. And then your profitability's got hit pretty hard, of course, because of that big cost that they took. Well, you can use this to look at a quarter versus a quarter, but you can also use it to look at annual versus annual, or in this case, the first 9 months of this year versus the first 9 months of last year. And you'll see some change and some swings year over year there. But not only can you look at that, Boeing 9 months here versus 9 months here, I can also look at it compared to a competitor. So here's Airbus's 9 months performance, and you'll see their numbers are better, but they also didn't have that $2.8 billion cost they had to take. And so difference in companies, but Karen, going back to your question, how do you know what's really going on? It's looking at these numbers. Yeah, the quarter looks pretty good. Your cash flow is coming in, but you're still working on profitability. And one of the big issues is your costs are going up. And so that's impacting some of your profitability as you go forward. Well, not only can you do it looking at a competitor, but you can look at any company. For those that were on last month, we did Disney. So very different industries. You got aeronautics, and then you have entertainment, right? Two different organizations. You see very different numbers. Look at those growth numbers on their profitability. Margins are much better, etc. Folks, that's the tool. So now what do I know? Well, I understand kind of their strategy, what they're focused on. I also see that their numbers, I really agree with him. He's coming out of it. Things have not normalized. I can see it in the numbers. So the question is now, what do I do with it? And that's the apply phase. As you look at application, learning and development is all about application. And at one point, we had a chance to, people looked at our assessment of the training that we do and said, what's the benefits we get? And companies that worked with us, we have a chance to work with 30 of the Fortune 50, many of the Fortune 500. And these are the types of outcomes. So if you want to think about how to use business acumen to help your organization, these are the types of outcomes you'll get. 84% of those who responded to the assessment, as third party did on our behalf, we didn't even know they were doing it. 85% or 84% said it'll improve performance of your business and function. Increase in collaboration within the organization. A better understanding of the businesses you're looking at and the strategies, what they're trying to do, will improve upward communication within your organization. Will improve employee engagement, increase business focus, and improve teamwork of the organization. So this assessment, as you think about what can I get by using or listening to earnings call and trying to continue to build my business acumen, here's the outcomes that you get. And one of the key factors of any of our training, any of our learning development, is you got to do something with it. If you say, hey, Brent, your tool's interesting. Hey, it was interesting to learn about Boeing. That's great and kind, and I thank you for that. That being said, the real value is, are you going to take this and do something with it? So the last part of the tool is, okay, now based upon what I've heard, if it's my company, if it's my customer, if it's an investment group I want to invest in, how am I going to apply it? I love this quote: to know and not to do is not to know. To know, done this analysis and know what's going on and not do anything about it, not very good. And that may have been your mom. Your mom may have said that. To know and not to do is not to know. Actually, I think it's a Chinese proverb, but here we go. So the applied phase, the last part of it is, what are you going to do with this? And here's my feedback. So what key insights did I gain as a result of my analysis? Number one, Boeing is still in the recovery phase. You can see it in their numbers. You can see it, but we're on the positive side of that recovery. Geopolitical issues, supply chain, talent constraints are all impacting on top of a huge debt obligation. What that means is they've got to generate free cash flow. If they don't have free cash flow, they can't pay down debt. So the question earlier about hedging the risk that Rod brought up, if we have a recession and they can't get through that inventory, it can cause some real problems for them. So getting to that positive free cash flow and strengthen their balance sheet is highly important for them. Now, of course, that being said, is we look at that and you might say, oh man, the industry's struggling. Well, right now, no, it's not. It shut down for a couple of years. People weren't looking at new airplanes. Now a lot of countries, a lot of commercial groups are coming to Boeing, to Airbus, etc. So there's a high demand, yet there's challenge in how to deliver on those demands. Of course, the insight I gained was how much Airbus is starting to step in and capture more of that of Boeing's market. And then, of course, China's impact, which impacts all of us for sure. So what would I do with this? Well, my role is that of a consultant, right? And I have a chance to work with many companies, many industries. Some of you are probably some of my clients. So what do I take away from this? Well, one of the things I want to do is compare their performance. I didn't get a chance to look at Airbus other than just some of the things that were communicated in the call. I want to see how Airbus is doing. I want to see what's going on in the whole industry and be more familiar with that. Obviously, sharing this information, our findings with consultants, clients, and new customers is a great way to say, hey, you know, think about industries that really thrived during the pandemic versus those that really had challenges. This is one of those challenges, and what are they doing about it to kind of resurrect and get in that better position? Now, of course, for us, if any of you happen to be on the call that are from Boeing, we want to work with you. I can't think of a better time as you're dealing with cash challenges to try and help your employees understand the levers. That 153,000 employees, what are the levers they can push or pull to drive greater cash flow for your company? That's what this is all about. So love to work with them. Well, now that I go, the last thing that you do is schedule a review. Take this information, have a conversation. If it's a company that I work for, I want to have a conversation with my manager. I want to communicate what I want to do with that. If it's a customer or partner, sit down with them. I listened to your call. Here's some of the things that I saw out of your call. How can we help drive towards those results, or how is that impacting you day in and day out? Use it to have a better conversation with your customer. If it's a competitor, how can you differentiate yourself? Take the information, have the conversation. Well, folks, it's been my pleasure to spend some time with you today. That is the tool. It's called the Earnings Call Workbook. Prepare, analyze, and apply using the executive alignment and navigating the financial to assess it. So here's my question to you. Who are you going to analyze? As I give you this tool, to know and not to do is not to know. Put in the chat box, who are you going to analyze as we look at that? The analysis group that you can look at is a company you work for, it's a company you sell to, compete against, partner with, invest with, or you know what? I'm going to prepare for the Visa one. Would love you to do that. If you want to come and get with us again in a month from now, we'll do this the first part of December. So here it is. If you want to get access to the tool, type in acumenlearning.com/webinar. Our colleagues here will put that in the chat box so you can just link to it. Our next call is December, December 14th. At that website, you can register for the next call. You actually get access to the workbook as well. In addition to that, we're giving $100 off for anybody who's come to this call. If you want a deeper dive or a refresher around these key metrics and measures, business and financial metrics, we got an incredible online self-paced program. We'll give you $100 off. There's a coupon code that you can get to access that. Now, if you're thinking, I want a more richer experience, I want to do this with my team, I want you to come in and look at our company, please reach out to us. We'd love to jump on a call and help you build your business acumen with your organization. Folks, it's been my pleasure to spend some time with you. Thank you again for your time. Have a great day, and I hope to see you next month as we look at Visa. Thank you.